Good afternoon, everyone. It's Chrissy from Solstice ATR. You can find us on the web, on Twitter, Instagram, Discord. You can DM me. Remember, we use adaptive algorithm for our trading, for equities, futures, option, commodities, crypto, Bitcoin, Ethereum, and many more. Remember, we are not a broker-dealer. We use this for illustration use only. We're not a broker. Once again, the data may not be copied without permission. Use at your own risk. And you can check our website right down in this area. And this is our phone number. Let's go to the next slide here. And I got to cover a lot of areas regarding what's going on in the international market, domestic market, as well as, the crisis between oil and other stuff. Let's first go to the first slide. It says Axel Capital. Let's go to number 3. You know who we are in Solstice ATR. Let's go to number 3. Doesn't want to work. Okay. This is regarding politics. We're talking about Ukraine, Russia, and the administration of Biden, what has happened to oil. Every time we had a recession, oil had spiked up. But it does not mean that we stay in recession and we continue lower, or we may reverse a little bit more faster than you think, because the production that's coming in from Russia of all their shipments in oil is represent for the U.S. only 3% of that oil. You know what they did? They stopped the production. They stopped the pipelines. They have to go back and reopen them and reassess what they are doing in relationship to electric cars and all the stuff they've gone over and environmental friendly stuff. I'm not trying to be biased or anything like that, but I want you to take a second, read the slide, and go from there. Let's go to number 4. Here, this is from Bloomberg, every time we had an oil spike more than 50%, we eventually got a small recession and a quick recovery. We have to adjust to inflation and what's going on in the cost of goods that you are buying from your store, such as grocery and items that are the necessary things for your home. And let's go from here. Remember, for 1975, it was very bad. 1982, then we had the 1990-91 crisis. We had the 2000-2001 bubble, 2002, the real estate, 2007, and the 2020 COVID. We are spiked back up here. Does this mean we stay up here for a long time? It can vary from 50 days, 100 days, all the way to 365 days before we can recover out of this situation. Let's go now, evaluate page 5. This shows that the 200 simple moving average of all the S&P 500 stocks are usually, when they are below or above the 200 SMA, we end up getting a reverse back in the market to continue higher. 3-4 months ago, if you told me where were we in relationship with all the stocks in the S&P 500, you can see here they were above the 200 SMA, and eventually most of them have fallen down back to 2022, where we are in March at the lows of this area. When we had it in 2002, 2007, 2010, 2017, 2011, 15, 18, 20, and now we are down the bottom. Does this mean we can consolidate similar to this area in 2002 or 2000? Possibly. Or do we reverse back from the mean, going back up to change the direction of the sentiment in the overall market? Let's go to slide 6. What I wanted to show is the 1985, 88, 1995, 2003, 2004, 2009, 2015, and 2017. What was after the recession, what they call recession, inflation, cost of goods? What was the average rate of return after that plunge and to rebuild back our economy? So, and remember, it's not just domestic, it's an international due to the crisis that's going on in the global market. Let's go to slide 7. Here, taking the drawdowns, we have to be open-minded, flexible, fluid in the market, act on things that happen day by day. Don't hold on to things that you're losing money, because you'll end up losing more and you'll be holding the bag. I want you to be open-minded, that things can change. And we can see here 2002, 2007, 2010, 2011, 2015, 2018, 2020. How long was the drawdown in a year drawdown? Average between, minimum of -2% all the way up to 25%. And the average, 3 days all the way to 335 days out of the year that the drawdown we had before we reversed back from the mean. Here showing in case we get a 15% drop, this will be this number. If we get this drop, we'll get this number. If we get this is showing where we were in relationship to the numbers, how far we can go down. But I want you to have an average, 3,700 is a number to always have in mind. 3692 in case we do have that major of a drawdown. So let's go to slide 8. Remember, this is from LPL Research, LPL money management firm. I picked this one on March 7th from LPL. It shows the 1950 all the way to 2022, what the drawdowns after the drawdown, after 1 year recession and a recovery, how much recovery we get after that plunge down and a reverse. Pay attention to what the market offers you. Don't be biased. We want to trade what we see, not what we think, okay? Let's go to slide 9. And remember, you can always check us out on the website. Hit the subscribe button on Solstice ATR, or you can reach me at that number. Let's first of all take a look at the S&P 500. Let's move this out of the way. We take a look at the S&P 500, Nasdaq, and the Dow, the combination of the three. Every time we had that little plunge in 2018, 2019 was the recovery. Then in 2020, we had the February 19th through March 23rd, that big slump down in the COVID-19. We had consolidation between August and November, and eventually we broke out. We continued higher till end of the year. In 2021, January 4th, after the December, that was our January 4th low. We had almost an identical number here. We continued higher, and eventually we had the January high. Then we fell back down. Does this mean we can continue lower? Possibly to the 116 simple moving average and the consolidation of the beginning of the year, which is the March low. But if in case we do not convert at that area and we fall further down, pay attention to what the market offers you. Let's first start by looking at the small cap, micro RT, micro M2K, I believe, 2K. I'm trying to use no Fibonacci's. I went back to the 3-year. I'm going to go back to a yearly. What I wanted to show in the Russell, this was December, January lows of the year. We retested them here. We are in this consolidation. If the small cap wants to continue lower, it can. We are away from on the weekly charts, we are away from the 18 and the 50 Fibonacci, as well as the 38.2. If this is considered consolidation, or would we revert back to the November of the prior year before the breakout in the small cap? I want you to pay attention to it. Let's go now for the daily chart. We're going to go time frame daily instead of full year. We're going to go up here to 9 month. I'm not going to go that further than that. And we're going to go to daily chart, push OK. And the reason behind it, I wanted to show you that the Russell is zigzagging back and forth. If this is considered a shoulder, this is a head, this is a shoulder. Does this mean continue higher and clear the 50 SMA and this channel? Or do we fall further down, add a compression back to the backside of this channel and fall further down? I want you to remember, we trade what the charts give us, and we want to be flexible in our thinking in relationship to where we are today in the small cap. Let's take a look at the micro YM. I'm doing these because I don't have a lot of fibs or channels on them, but I want you to pay attention. We are in a downtrend. If I get a channel from here connected to this one here, we know we are in a linear regression downtrend. We have a midpoint in it. This is the lower channel. We have a sharper channel down here that we retested the 18 simple moving average, which is the midpoint of the Bollinger Band. I want you to pay attention to this channel. Or do we recover above that 33,035 in order to get back up to the 38.2, 50 fib and the 50 SMA the 200 and the 116, which would be the 61.8 if things work out in that direction, or do we fall further down all the way down to the backside of this channel down here before we revert back to the upside? Remember, we are in a downtrend. We're going to take a look at the micro NQ. Micro NQ is in a similar situation. We can connect this channel to this. You can see how far it is higher. Even if I connect it to here, that's very high. And if I connect this one to one of these channels up here, we can see we are in a downtrend on the Nasdaq 100 because it consists of the large cap growth companies such as Google, Amazon, Netflix, Tesla, Microsoft, Intel. So I'm just naming some of the names. Does NQ, if it clears the 13,703, does it come back to the 18 SMA and the backside of this channel to clear the 38.2, or do we fall further down to the backside of this channel and maybe a little bit more towards the January low of 2021? Let's go now take a look at the micro ES. And what I wanted to do, we have a similar situation in the micro ES or the E-mini. I usually use the ES, but I'm trying to use the micro so you guys can see the levels more efficiently. If they consider this as a shoulder, this is a rounded head. Is this the shoulder or double shoulder? And we are in a symmetrical triangle, because if I connect this to here, you can see we are still in that sharp downtrend. The 18 SMA is still holding us down. We tested the almost to revert back to the upside of the 38.2. We fell further down on Friday. Do we continue to the backside of this channel and we retest the June lows? Because that's considered, remember the week before I had showed a slide that had showed the 10% decline, the 14%, and a 12.5% decline. If you can go back to the prior week's video, I had the SPX up there and I represented that chart up there. So pay attention if we end up losing that 14%, because if I take this channel and I grab it from here up here and I just draw a straight line down, this is a 15% drop in the market. You can see it's around here. If we go more than 15%, that would be about 18% and further on. Or do we reverse back up to 10%, reverse and continue back higher? I want you to pay attention to what the charts offer you. Remember the 18, we tested it on Friday, couldn't hold it. We fell further down and we sold into the close, into the market due to the fear between Russia, Ukraine, and the international markets in the, politics, global markets, war, non-war, consumer product staple, as well as all the manufacturing that's going on. So let's now break it down by taking a look at the crude oil CL. And this is the reason I should use the micro CL. So we don't have much Fibonacci's on it. We can see from the prior year, after the December consolidation, we broke up in January. From here, this was the November, October area. Then eventually we broke up beginning of January. We consolidated a little bit higher and eventually we spiked above this channel. We tested the 261 Fibonacci on the monthly charts. We retrieved from that situation, coming back to the 61 annual Fibonacci Fib extension. Do we hold this channel to continue higher, or do we end up touching the 18 simple moving average in the backside of this channel, which would be the 50 Fib, and the 38.2 has been tested? Do we come back to the backside of this channel, or do we reverse back to the high? Remember, they have to solve the issue with crude oil in order to keep us the prices on the pumps lower than $657 in California. Other states have seen the same situation. Some states are in the 450, but we are here to overpriced. I think that this is just a reaction of what's going on in the Ukraine-Russia war. Let's take a look at GC, micro GC or GLD, micro GC. And we can see that the micro GC on the weekly, I'm going to go 3 years out so everybody can see where the breakout. We were in a linear regression down channel. Eventually we retested it higher, fell back in. We consolidated for a while and we got that spike. We retested the double top. You can use GLD, HUI, or GC for gold. That way you can see in relationship to where we are today in the micro GC. Does this mean we can consolidate here on the daily? We're going to go back time frame. Daily, we're going to go 9 months out, and we're going to look for the daily chart. Does this mean we are consolidating, come back down in this area to the 18, consolidate before we continue higher, or do we go range bound at the 1970, 65 area? That's in gold GC. Let's take a look at BTC. I'm going to put the regular contract up so that way you can see the Fibonacci's BTC. It's going to look a little bit dirty. I have the monthly fibs on it for the measured move. But if I take the GBTC, which is the ETF fund, will show you where we are in relationship. There was a gap up here after we tested the annual high. We fell back down, and I called this move. We tested the 32, reversed back to the 45,000. Unfortunately, here at 45, 46,000, we couldn't hold. We double topped almost. We fell back in. We were still inside this symmetrical triangle. Does this GBTC fall back to the backside of this area to 26,000, or do we reverse back, clear the 46,000 and clear the 47,215? This is a very critical number that I have in my head. I think if GBTC or BTC, which is Bitcoin, as well as Ethereum, if we can clear that area, it gives us the ability to trade to the upside. And what I'm going to do is show you the GBTC, which is the ETF fund for Bitcoin. And this is a very important area that GBTC clears in order to continue high, because the 32 and the 3180 was very critical. You are in a down channel. You can see we are wedging. We fell below, came back up. Does this mean we fall back in, or do we continue higher to reverse in GBTC? Because it gives the opportunity for traders to get back in Bitcoin. Let's take a look at right now AAPL. I'll do them fast. You can see it's still in a down channel. Amazon is in a similar situation, gap up, tried to touch the Bollinger Band, fell down on Friday. Let's take a look at Facebook. Facebook is in a total pain house. We can look after the earning report. Facebook has not been able to recover out of the 216. It tested the 213, tried the 190 a couple of times, looked up. It's still in this channel. Keep an eye on this channel. Once this channel breaks out, you look for the other side of the chart. I'll just zoom in here so you can see it. It's still in a downtrend. Once Facebook clears this channel and tries to break the 18 SMA, I would look back to clearing the 216, the 220, the 225, the 238, the 244, which is the annual Fibonacci low for the prior year in 2021. I'm not biased to be, but this was a gap from before. You can see it came from 429, 2020. If Facebook clears this area, or does it continue falling to the backside of this channel and the extension 161, which is the annual fib from the high and low on Facebook. Let's take a look at NFLX. I'm doing a couple of them, the stocks here. You can see that Netflix is in a similar situation. It's still in a downtrend. It's probably has double bottomed. If it doesn't and it falls further down, you pay attention to what the charts offer you, because it is sitting on the 161 fib annual chart, fib extension on Facebook from the prior year. Let's take a look at Tesla. Tesla, you can see it's still in a down linear regression down channel. This was the prior week high. Does it fall to the middle of the center and U-turn, or does it reverse back Monday, clearing the 38, the 50, and the 61 and the 50 Fibonacci? So pay attention to what the charts offer you. Let's take a look at HUI. I'm just going to go do some, HUI. This is a mining stock in gold, so pay attention to it. You can see that roundedness. If it consolidates or falls back to the 38.18 SMA, does it get picked up here, or does it get picked up here where it broke out of this candle that took us down? Does it consolidate where this consolidation between this candle here, this candle here, this candle here, or a little bit above to continue higher? That would be support in HUI. Let's take a look at the XNA, which is natural resource. You can see natural resource had spiked up all the way on an annual chart. Look for consolidation at the 50 Fibonacci as well as the 50 SMA before you look into natural resources. Let's take a look at IEF, which is the ETF fund for Barclays 7-10-year bonds. You can see where we're trying to spike up. We fell back in. We have to pay attention to these areas in relationship to where we are today in the bond market. Let's take a look at the energy GJX. I'm doing different ones so that way every week you guys can get a better idea, or if it doesn't come out, I can use the, and we use the other one. We can use the GNX. Okay, dollar sign GNX doesn't want to do it. Okay, the TOS doesn't support it. Looks like, okay, the TOS doesn't support it because you have to go to trading view. That's okay. We can look at JNK Bloomberg yield. We can take a look at the XLF, which is the financial, XLE, XLP, that's the energy, see it, XLP, that's the consumer staples and discretionary, XLI. So you can see that these different sectors in the international and domestic, you can use the spiders, the iShare, or Schwab, or Ridex funds, but I wanted to give you an overall view what the market was doing. Let's go back to the ES one more time. I'm going to break this one because it's got the Fibonacci and the measured move. I used the micro earlier. We're going to look at it a little bit more in detail in relationship to where we are today in the ES or the SPX. We can see, or the SPY, we are in a linear regression down channel. We had these two channels up. We fell through here. We had a double top at 86.45, 86.45, 85. Fell down. We created a cup. This is the handle of it. It tried to spike up. Pay attention to this backside of this channel. I do have this one down here on the daily chart. What I want to do, go to the 4-hour to show you in relationship where we are today. We're going to go daily. We're going to go from here to a 45-day range. We know we are in a linear regression down channel. You can see the backside of it in this one. This is the monthly measured move, 38.2 from the zero line, which is the 50% fib. This is a very important number, the 43, 45, in order for S&P to reverse back to the mean, and the 4,300. We looked up in the overnight, fell in, maybe because we were inside. If you can see here, even if you take this channel from here to here, we were in a symmetrical triangle. We fell through that triangle yesterday, and this was a given to us. Basically, if you looked at this backside of this channel, when we broke through it in the afternoon, we tested half 1/3 of this candle, couldn't hold it. We fell through the breakdown of this candle, gave us a short into the close. And if you did connection of the breakout of this candle and you connected it to here, we tested the backside of it. Pay attention to what the charts offer you. Remember, volume profile helps where the range is between the value area high, value area low, and the POC in relationship to time spent. If you like this video, please let us know. We're here to help you. Check us out on the website. DM us. Take care. Over and out. See you next week.